Welcome back to Pulse on the Market. I'm your host, Jaden Rains, founder of Rains Capital, and this is the show designed to help you guys stay in the loop, whether it be crypto, stock news, or just overall geopolitical news that'll change the market. I'm your man to keep you in the loop. I do the research so you guys don't have to. All right, anyways, so to start things off, the market overall is up on the day. The indexes are up. The Dow's up 0.5%. The NASDAQ is up 0.8%. The S&P is up 0.68%. Small caps up 0.8%. And the 10-year is down 0.91%. So overall, it's been a solid day for the market. We got a lot of big winners and very few big losers. So let's get into the S&P movers. So Hewlett-Packard, which is HP Enterprise, is up 9.5% today. Cincinnati Financial is up 6%. We got Target up another 4%. Target had a killer earnings report, and which is impressive because the retail industry as of right now hasn't been doing so well, but Target surpasses earnings, and they are trading very well. Their stock's looking great. Pfizer's up 3.43%. Pfizer's been a terrible stock over the last year. Let's take a look over at their stock, at their ticker. So let's see here. Oh, where did it go? I had it. Yeah, their stock ticker is PFE, and year to date they're down 6%, but over the last year they're down 33.8%. And if we go back even farther, it's just been a disaster. At one point in time, this stock was worth around $60 a share. I think it was even more at one point. I think that was the peak, actually. So they're at $60 a share. Right now, they're trading at just $27. So it hasn't been the best investment. But if they could veer off from the COVID vaccine, because that's what happened. The demand for the COVID vaccines went down, and so did their profits, their revenue. Their EPS also went down. But they're going to start... I think they're going to take a turn. They're going to veer away from that and start creating more products and come out of this hole that they are in. But we'll have to find out. We'll see. All right, let's see here. For the biggest losers of the day, Brown Forman B is down 8%. Northern Trust down 3.8%. Palo Alto Networks, which I really like this stock. It is down 3%. One thing on Palo Alto Networks is that Nancy Pelosi bought, I think it was 50 to 70 contracts. It was for a 200 strike price, and this is for next year, January of 2025. So these are expensive contracts. These run at around $15,000 per contract, at least at the time when she bought them. And so she's playing the long haul on Palo Alto Networks. It's cybersecurity. And to be honest, I'm a big fan of the stock as well. It's nice to see it drop a little bit. It makes it a little cheaper. I think it's a lot cheaper. And I think value-wise, I think it'd be worth around maybe $340, $350 as of right now. And so I would happily buy it at this stock price. That is not financial advice, just so you know. This is just a personal opinion. It could go to zero, who knows? But I am bullish in the long run on Palo Alto Networks. That's PANW. So while they're down on the day, I think potentially they can see a huge rise pretty soon here in the future. They were hitting highs of around 380 for that earnings report, and what made their stock drop was the guidance. The guidance was a little lower than expected, and this caused the stock to drop. But I'm looking at their free cash flows, and I can see the potential of the free cash growing, and I love seeing that. I love the potential. I love the future earnings. And while it was just a little shorter than expected, but still, I think they're going to surpass those expectations, and the stock is going to shoot up way higher than it is right now. I think it's going to surpass what it used to be too. All right, let's take a look at the news stories for today. So yesterday was a rough day. I apologize for not having an episode, but yesterday the market was getting smacked. The Dow dropped 405 points, so that was around 1% yesterday, and also the NASDAQ and S&P fell, and so it was just a weird day. Apple shares dropped another 2.8%. So they had news of a sales dip in China once again, and there's just a lot of bad news, and stocks were dropping. Wasn't very good. We saw stocks like SMCI that just completely tanked, and then they just shoot back up. Man, it is a risky business if you're planning on trading SMCI, just like day trading it, or even swing trading it. Because one day it'll be all the way up to 1100, and one day it'll be at 900, just in the very next day. So it is very, very volatile. If you want to buy options on it, they are very expensive. I think at the money's around like $9,000 for the next 2 days. So they're very expensive. That's for a put. The calls are a little cheaper, but because there's so much potential for it to just tank, that it's way riskier to sell it short than it is, or to on the short side it's a lot riskier than going long in it. So all right, let's see here. Right now they're trading at 11.42, so $1,142 a share. They're up $50 a share today. That's around 5%. And along with NVDA, another 3% day. NVIDIA, their market cap is currently $2.22 trillion. So they are just blowing that away. They're on the run. They're trying to catch Apple. And by the looks of it, hey, they might have a chance because Apple keeps dropping. It's at 2.62. A couple days ago, it was 2.65. So while they're dropping and NVIDIA's rising, I think they could become the second biggest company in the world pretty soon here. We'll have to see. A lot of people think that we're going to see a pullback from NVIDIA, but this chart is just up. It's crazy. Everyone's wondering where is the top for NVIDIA. We don't know. We'll have to find out. And yeah, I guess we'll see. All right. Let's see here. So the EU, which is the European Union, is cracking down. They're being kind of annoying with tech giants like Alphabet, Amazon, Apple, ByteDance, Meta, Microsoft. So they're going to create new regulations that they want these companies to comply with, and that starts on March 7th. So this marks a significant shift in how these companies are going to have to operate within the EU market. So we'll see how that affects them pretty soon here. Bowflex, which is BFX, has filed for Chapter 11 bankruptcy. So post-pandemic challenges hit them pretty hard, and they are filing for bankruptcy. And so it's kind of crazy. Johnson Health Tech is set to acquire its assets for $37 million. Man, they're just taking the organs out. They're gutting it. So let's see here. Meta resolved a technical issue that causes outrages on Facebook, Instagram, and Messenger yesterday for about 2 hours, affecting hundreds of thousands of users. Companies invest a lot to prevent downtime for their apps, for their services, because just a little bit of downtime can create havoc. It can create massive losses, and we saw that with Meta. And they resolved it. Everything's good now, but people are upset when their things don't work when they want them to. All right, so Nordstrom, their shares dropped 10%. So this retailer forecasted a potential sales decline in 2024, which caused a sellout in their stock, dropped by 10%. Even if it's not that serious, still investors don't like seeing the company report less than expected, so it caused the stock to drop. I think the stock of the day, for me at least, is CrowdStrike. So CrowdStrike, their stock ticker is CRWD. And their stock shot up 13% today. It was a little higher, so they're up $38 to $336 a share. And so they had an earnings report, and it was really good. So the report was 0.95 EPS, and their estimate was 0.82. So they beat that by 15%. And the revenue only surprised about 0.74%. So they reported $845 million. The estimate was $839 million. So they beat that by around $6.2 million. And so it was a solid earnings report for CrowdStrike. Investors are happy. Stock shoots up. It was up a lot more, but we're starting to see a little pullback here. But go CrowdStrike. Good for them. In case you didn't know, they are basically a cybersecurity product. So I'm bullish on cybersecurity. That's becoming more and more important. I think it's a great industry, especially with the AI boom. And just as we get more technologically advanced, we're going to need more security to back us up. So CrowdStrike, along with PANW, Palo Alto Networks, and just other cybersecurity stocks have been doing very well recently. Dude, I mean, they just have a huge demand. All right, so OpenAI, I don't know if you guys saw it, but Elon Musk filed a lawsuit saying that OpenAI has veered away from their original goals of just being for humanity, for benefiting people and technology, and he says that they're turning into a profit-first company. And he said that veers away from what we believed in when we first started the company, because Elon Musk was a co-founder in OpenAI. I'm not sure exactly how much he had to do with it, but he was there for a few years from 2015 to 2018 before he left the board. And OpenAI responded to his lawsuit by asserting that Musk once sought absolute control of the company by proposing a merger with Tesla. So the goal of the company is just to dismiss Musk's claims, and I guess we'll see what happens. They kind of fired back, and yeah, so I have no idea what's going to happen or what the reason behind all this is, but There's speculation that the reason why Sam Altman got fired is because of the advancements on their general AI, which is the AGI or whatever it was. I forgot the exact name of it, but it's that robots can replace human tasks is the goal of it. And they were concerned with the end goal of it, and they viewed it as a security risk because of how advanced it could be. So they fired Sam Altman. Yes, this is just speculation, a rumor. It could have been for insider reasons, just to be able to switch or to adjust things in the internal side of OpenAI. Who knows? But all I know are So I guess we'll see what ends up happening with that. So I think the feud will get solved. I don't think Elon can actually sue them for turning into a profit first company. I guess we'll find out. So the Fed chair Powell, his testimony in Congress is on Wednesday. So that's today, actually. Let's go. So everyone's going to be closely watching for any hints on the timing and extent of interest rate cuts. So because the economy and inflation run hotter than expected as of right now, and so any slight news in either direction is going to be very good. So it'll be very influential. And especially if we get a hint at an inflation cut, I think we could see a spike in the market once again, because that's what the people want. Investors want to see that the government is starting to get inflation under control. And if not, if there's no hints once again and they're expecting to hike them, then we could see a very big drop in the market. We'll have to see. All right. So sources say that Nikki Haley will suspend her presidential campaign, leaving Donald Trump as the last major Republican candidate for the 2024 nomination. The election is very important for investors because it has a huge impact on the U.S. economy around election time. And it could get pretty bad or very good. We'll have to see. But typically, if things go bad, they have a huge impact on the market. So make sure to stay tuned for election stuff, election news, just so we can know how to properly invest or hedge our positions or whatnot. It's important to stay in the know with presidential stuff like this. All right. So Jeff Bezos passed up Elon Musk once again. So they're kind of in a rat race where one's beating the other for a little bit and then they switch off. And according to the Bloomberg Billionaires Index, for the first time since 2021, Jeff Bezos passes up Elon Musk and becomes the richest person. So that's good news for Jeff Bezos. I mean, Elon Musk and Tesla's been suffering recently. Let's take a look at their stock, but it has not been looking pretty. The chart does not look very good. I kind of saw this coming. I felt it coming back when it was trading around 240 a share. I was like, ooh, this doesn't look too great. I'm not super bullish on it. And it's now at 177. So Tesla. So they're on track for their lowest close since May of last year. So it's not been a good time for Elon Musk, which is why Jeff Bezos is passing him up, because his net worth is dropping due to the drop in Tesla because he owns a large stake in it. All right, earnings reports. So other than CrowdStrike, Ross Stores reported, and let's see how they're doing. Actually, I haven't looked at their stock ticker. So Ross, their stock ticker is ROST, Ross Stores, and they're currently they're around flat. They're down 0.18%. And they released their revenue of $6 billion, and so they beat the estimate by $245 million. So they're up 15% year over year. And the EPS they beat it by $0.19 per share, and so that's a 38.93% year over year. So that's $1.82 per share EPS. So solid earnings report from Ross, but we haven't seen a very big gain in their stock. It's just relatively neutral. All right, upcoming earnings. So Broadcom will report tomorrow after close, and analysts are estimating around $11.71 billion in revenue, which is up 31.35% year over year, and $10.26 in earnings per share. That's down 0.68% year over year. So Broadcom's a huge stock, and I'm excited to see what happens with them tomorrow. Costco will also report with them. So analysts estimate $59 billion in revenue, which is up 7% year over year, and $3.62 per share in earnings per share, and that'll be up 9.7% year over year. I like Costco. It's a very solid stock, and I'm excited for that stock as well to report. Other than that, nothing too crazy. We got some companies like DocuSign, Marvel Technology, Kroger, MongoDB, Samsara. So we got some other companies, but we're on 97% done with all our earnings report for this season. And we're only, 5-6 weeks away from the next earnings season. So it's already coming up. It's around the corner. And I love that. I love that how frequent they are, at least how they feel. And I like that they're spaced out because at the end of all their earnings reports, it's almost time for the next one, for the next season. So that keeps it fun in the market. All right, I think the underrated stock of the day has to be Texas Roadhouse for me. I am a big fan of the restaurant itself and also how the stock trades. So they recently came out with their earnings reports. They did pretty well. They beat the estimates, and it was at 135, and now it's currently at 152. So I remember looking at the stock back when it was worth around $100 a share, and I was hesitant on getting in on it, and I feel a little more seasoned, a little more mature in investing. And back then, if I would have known what I knew now, if I would have knew what I know now, there it is, then yeah, I probably would have invested in it long run because their dividends are constantly increasing. Their revenue, EPS, their projections are solid, and they just keep performing well. They haven't had any major pullbacks. Year to date, they're up 25%. Over last year, 45%. And let's take a look at their estimates. So their trailing 12 months, their first quarter was 1.28 EPS, then 1.22, 0.95, 1.08, but they're projecting 1.6, 1.48, 1.14, 1.4. So we're seeing huge increases in the EPS. Along with the revenue, it's supposed to go up as well. So the trailing 12 months would be 1.17, 1.17, 1.12, 1.16, and they're projecting 1.32, 1.31, 1.26, 1.39. So in the revenue, we're seeing huge increases as well. It's a phenomenal restaurant. I love going there. Their rolls are probably why their stock is trading so high, because they are amazing. And man, I can't get enough of that butter. So big fan of Texas Roadhouse. I might get a small position or wait for a slight correction to buy it back a little cheaper. We'll have to see. But that is on my watch list for sure. Bitcoin broke its all-time record. It broke 69,000. So immediately following that, it dropped quite a bit to, I think it was around 58. So it had a weird, it breaks its all-time and then just shoots down to around 59,000 per coin, 59,000. And now it's back up to 67,000. Shows the volatility of crypto, that it can just take a huge rise and huge fall in the same day. And but long run, I'm still bullish on crypto. I think that's just the beginning of it, and it's still in the early adopter phase. And I think the technology will just continue to advance, and it'll get bigger and bigger, and the market caps will grow for the coins. We'll get different subsectors of crypto that get a little bigger, so that Bitcoin isn't the only coin affecting the entire market for crypto. We'll have to find out. So the halving event is just a few weeks away. Starting in April, they're gonna make it twice as difficult to mine Bitcoin. So the supply you get for adding onto the blockchain. So when you add onto the blockchain, solve the equation, you receive a block of Bitcoin, and that block will be half as much as it once was. This happens around every 4 years, and the demand for Bitcoin shoots up. So that'll be good to see. Bitcoin, statistically speaking, historically speaking, it should rise after the halving event, unless it's already priced in. Not really sure, but I really doubt that it's 100% priced in, especially with high inflation and just difficulty trading the stocks. I think that a lot of people will turn to currencies like crypto in moments like these. It might turn into a gold type substance. We'll see. I mean, it's obviously a lot different than gold, but we could see an influx of people leaving stocks and going into Bitcoin. We'll see. And with these spot ETFs, it makes it a lot easier for people to transition into the crypto world, because that was the main difficulty, was just that technology separation between knowing how to buy it and not. The spot ETFs bridge that gap and allow people to easily get into Bitcoin. All right, I think that is it for today. And once again, guys, thank you for tuning in, for listening. If there's anything, like if you guys want a specific stock to be researched and to give you guys a solid report on it, please reach out to me at marketpulse.io. I will get back to you guys as soon as I can. And once again, here's my little podcast. So this podcast is for informational purposes only and does not constitute financial investment or legal advice. This is all personal opinions, and you are advised to conduct your own research or seek the advice of qualified professionals. And so the host and guests do not guarantee the accuracy or completeness of the information shared, and they are not responsible for any actions taken based on the content of this podcast. It's all risky. All these suggestions or whatnot could go to zero. I'm not saying they'll go to the moon. It's all opinion based, and I'm not responsible for any losses or damages that may occur as a result of any investments made after listening to this podcast. Once again, thank you guys, love you, and I will see you tomorrow.